Hello and good morning, listeners. It's the Friday and ritual says we begin with TGIF. Although Thursday was somewhat upsetting for a few of the people across, Japan's football team pulled off an upset for Spanish as well as the German fans together. Another was the a contingent of Almus team also went to watch Mumbai upsetting the Goan fans with a thrashing of 4-1. Football has been taking a lot of craze lately, and just like that sort of upsets, we were also seeing USD bulls having an upset yesterday with DXY breaking below the 50-week EMA. Gold soared, the yield slid, and the currency strengthened against the USD. Majorly on the backdrop of reduced hiking pace as well as a cooling inflation, good consumption numbers, etc. So, JK, what do you think? What's happening? Have we seen some major shift happening yesterday as even the Asian currencies are showing some phenomenal actions?
Good morning. Shikhar, you failed to mention one more upset. That is the the INR bulls. They're totally disappointed yesterday as the dollar rupee failed to make any follow through on the downside. In fact, actually has bounced back towards 81.40 after failing to break 81. And this is happening even as dollar index has slumped more than 9%. And what I have seen is also the emerging market currency index has also risen about 4.5% since the lows, whereas the dollar rupee still trades just 2% lower from the highs. So whoever was shorting the dollar rupee yesterday must have got frustrated because the buying was very strong at 81.10, and it's definitely a relative underperformer even compared to the Asian peers. And the this would mean big downward shift actually in the RER compared to the major currencies. For most part, this underperformance is driven by underlying challenges of external deficits, and more recently due to central bank mopping up flows, looking to replenish the reserves and also support the export sector. While much would depend on their policy as for the future moves, eventually market forces and flows, I believe, should see the rupee see better levels in the coming weeks with a target of 80. Coming back to the global markets, Powell's dovishly interpreted speech on Wednesday is still having its impact on the market on yields and resultantly on the currencies. Both 10-year and 2-year yields have fallen to 2-month lows of 3.51 and 4.24 respectively. Technicals pointing more downside and getting more a momentum from the US economic news. Positioning in the market, investors being less allocated into fixed income after the hefty rate hike started by a Fed also behind these moves. There's been a noticeable pairing of rate hike expectations, with market now pricing in peak US Fed funds rate of 4.86%, down from 5% on Tuesday. The dollar index downtrend has garnered more momentum, with fresh data from Europe and US pointing to positive divergence towards the former. S&P Global's survey on manufacturing in Europe as well as UK were improving over previous 9, while that of the US not only came lower but went into a contraction territory to 49 from 50.2 as per the ISM report as well. Besides the headlines, which printed lowest since May 2020, all the components like prices paid, employment, and new orders were weaker. So obviously, the stocks failed to hold on to the highs on Wednesday, despite the strong string of poor data yesterday, because the market is still assessing the possible impact of an impending recession in the US as well as other major economies. Looks like the market is divided on its views, and a decisive change in the Fed view will only give a definite direction to the market. Of course, Chinese yuan stands out because not only has it gained nearly 3% since its recent fall, but also looking to gain more. Chinese authorities contemplate more COVID relaxation measures, particularly on the quarantine, home quarantine, etc. So, yeah, as I was saying, it's been a winter of US economy for economic data with a stream of weak data points. There were two data points overnight that also suggested inflation pressures were easing. That is, prices paid index in the ISM fell to May 2020 low, and the PCE price index rose only 0.3%, advancing by the same margin as in September, but on a year-on-year basis fell to 6% from 6.3% in previously. Challenge job cuts rose to an absurd 416.5% year-on-year due to base effects, of course, though in level terms, it is now at its highest since January 2021. Finally, the Atlanta Fed updated its GDP tracker for Q4, which is now revised down to 2.8% from 4.3%. So all in all, the dollar bears have got a huge momentum with poor economic data, and also the yields falling, and the lead up to the jobs data today is definitely something that we will see as quite dismal for the US. In fact, the jobs data in the US never fails to excite, at least until it is published, although the price action later many times disappoints. As we know, the ADP came lower, ISM employment component and job cuts data were weaker, although the weekly jobless claims published yesterday was slightly better. But important thing will be, even if the data comes weaker, how much it influences the Fed decision. Finally, the reports indicate that Europe will be setting the price cap on Russian oil at $60 per barrel, a figure which is unlikely to impact Russia, given its oil trades at a discount to benchmarks already, and their cost of production is much lower. Some indicate it is closer to $20-25. So they won't be a big loser if the price cap is around 60. One of the reasons why countries like Poland have been arguing for a much lower cap on the price. We also have the OPEC meeting over the weekend, which is now turned into a virtual one. Experts feel that if they don't cut production, oil prices will again slump. But at least yesterday, it was reacting more to the Chinese economic recovery prospects and more easing measures of Chinese authorities on their COVID aspects. So we had a very hectic week of data, price action moves, and yeah, definitely both in stocks, bonds, and currencies. Look forward to some more tonight. Possibly some profit taking on the dollar shorts is what I think. But the biggest question mark for me would be how the rupee reacts if the dollar starts to recover again. Thank you.
Okay, JK, and that was quite hilarious. I mean, yes, INR bulls were also ones having a big upset yesterday, even though all the currencies have been strengthening against the USD. USD INR has not really shown that kind of might in coming down. On the other side, yes, as JK mentioned, there has been a whole host of data points released this week, with many of them on the weaker side for the US, pushing the sentiments for an ongoing impending recession, or how would the soft landing, as the US Fed has been wanting, comes in. Another good update was the COVID relaxation measures, as the China starts moving towards opening up a bit more of the economy, putting CNH in the recovery zone. Folks, all in all, we can say this week has been a good ride for all the currencies, with quite good volatility and data releases. There is still a lot more coming up. For example, the jobs report today. So let's see how things go about in financial markets, and we shall come back with another round of update on Monday. Till then, folks, if you guys haven't registered yet for Almus Rupee Money Conference, please go ahead and do the registration. It's one of the most sought after event for the financial or the forex industry, with all the stalwarts coming in, and there's no need for us to say more. Please go ahead and register. Thank you so much for listening.